Good afternoon, everyone. Hope you're having a great time so far here at the Finance Magnates Pacific Summit 2024. Please welcome on stage Dr. Irene Guiamatsia, Head of Research at Investment Trends, who will give a workshop on exclusive Aussie retail industry deep dive. Dr. Irene, the stage is yours.
Thank you all very much. Well, thank you, first of all, Finance Magnates, for the opportunity. It's really a pleasure to be sharing our data with you today. So we have about 25 minutes, I'm told, to give you this exclusive deep dive on the behavior of retail investors. We also called it the global frontier because what we try to do is start from the behavior of retail investors that we study in Australia, but also in 9 other markets, and actually weave that into some of the changes that we're seeing from the regulatory side and the advice side to perhaps bring you those propositions of what the next frontier could be as you service consumers and end consumers. So that's the plan for today. That shows up, which is great. All right, and so why is Australia bucking global trends? Perhaps, in 15 minutes from now, I can come back and revisit that question, and hopefully I'll have convinced you that Australia is really bucking some global trends to a degree. All right, so I usually start my talks by explaining who Investment Trends is and what we do, but I actually thought that this slide was really good to actually making just that point. So we do market research in financial services. In Australia, we have a broad portfolio across trading behavior, wealth, superannuation, and anything that consumers engage with from a financial services perspective. The chart on screen shows you some of the results that we have from retail investor portfolio in Australia, but also in those other markets. So as you can see, we survey retail consumers in Singapore and Hong Kong, as well as Australia, so that's our APAC suite, but also in the UK, in the US, so that's where we see our biggest market, and you will see interspersed there in the purple number somewhere, the results from our inaugural UK crypto investor research as well. So quite a broad scope, if you will, when we look at that behavior of retail investors. What I will say is, if you look at the US, you can see 11 point something million investors as at our last measure, which was in 2023. So that's our biggest consumer market when it comes to retail investing. But when it comes to OTC leverage trading, the UK market is actually the biggest, much bigger than the US, which kind of just speaks to the engagement of that population, but also speaks of perhaps the constraints from a regulatory perspective and the difference between those two markets, yeah. Australia, so the number is relatively lower, but actually on a per capita basis, APAC is actually the region where retail investor has the highest penetration. So there's kind of different ways to kind of look and cut this chart. So that gives us a good sort of place to start. On screen, so I'm actually about to show you some of the trends that we saw. Pre-pandemic and post-pandemic is a story that we're telling very much these days. But to explain some of the growth that we've seen in some markets in particular, I really like this slide, which shows the penetration of crypto in the US. So 58 million was our estimate at the end of 2022 of people who at least once upon a time actually invested in cryptocurrencies in the US. And so we pin some of that participation in cryptocurrencies to the significant sort of groundswell, if you will, that crypto investing has seen in that market and some of the others. Now the chart that you see next to it, so maybe I'll just walk you through some of the numbers. I think it's important. So 58 million in the US is the sort of market size, if you will. Out of that, some have stopped and some are still sort of active. Among those active, we have almost an even split between those who still hold crypto and those who actually hold but were active in the past reporting period. And that number is 25 million. And so now we transport the 25 million to the right-hand side slide, where you can actually see, compare, when you look at participation as in active in the past reporting period, the US market is certainly a lot more active than the UK, which is in the middle. where participation in crypto is almost on par with cash equities. And on the right-hand side, Australia, participation in crypto is about half of cash investing. So that really gives us a good base of comparison between those three markets. All right, let me move on and show you the before and after pandemic story. So here we've normalized all these numbers because, if we plot the US against any other country, they kind of just tend to dwarf all of the other markets. So normalizing everyone at 100 in 2018, we see the progression there throughout the crisis, the pandemic that we had in 2020. And I think it becomes very apparent that Australia and the US were the markets to increase the most, so the green and the blue on the chart. We also see something from a mechanical engineering background I like to call residual strain. So essentially, we've had this massive sort of stretch, if you will, of the numbers, but now we're back not at the initial position, we're back at the position that is, higher than the original one. And that residual strain in many markets, the US and Australia in particular, actually looks to be maintained. So it's going to be really interesting to see how this continues to evolve going forward. But there are already some signs that in Australia, we have probably reached the post-pandemic normal. So that in itself, I believe, is interesting. I can see some perplexed faces, and I really like to encourage you to ask questions after this session. So let's please keep your questions in mind and put them to me later on. All right, so about the same slide, but really the point that we're making here is that Australia, the only data point that we've measured since the previous slide that I show you is in Australia, and we can see the little bit of an uptick in the number of retail investors here. So that's 1.28. 0,000, as you can, that you can see there on screen. And so this is kind of the genesis of our characterization that Australia is bucking global trends, right? Because at this point, we're still seeing a bit of a declining trend elsewhere, but Australia has started to kind of recover and actually grow. All right, so some of the reasons behind that perhaps, I don't know, discontinuity or dislocation, however you want to call it, is number one, the observation that we're actually starting to see a significant inflow of new-to-market traders, investors. So these are people who have placed their very first online investment in the reporting period that we're measuring. And what is even more fascinating is the profile of those investors in Australia in particular. So I take you back to 2020. The story that we were telling by then is, it's incredible. There's this amazing influx of retail traders. They're all really young. The proportion of Zoomers starting was 1 in 6. Now, guess what? In the latest reporting period, we had about 30% of those new starters be Zoomers. And so, this is down to a whole bunch of things that I'm going to share with you now. And this kind of highlights also, how we conduct our work, really trying to go beyond the observation that perhaps, everyone can make, and really understand what's happening underneath the bonnet and understand the driver of the changing dynamic that we're witnessing. All right. So here's a busy slide. I will walk you through it.
Center stage for an exciting session on AI and financial services.
Please do not leave. All right. So on screen you see a number of slides there. So we're talking to these new online investors and asking them why they actually started investing. Well, the benefit we've got is that we've been asking this question for about 20 years. I'm showing you on screen 3 waves worth of data. But I want to make a couple of points with this. The first one, if I take you just to the Australian slide, right? So the ability to invest with small amounts of money is cited by 60% of respondents who started. Remember I said the pool of new starters had actually kind of just exploded in the past reporting period. So a whole range of things I think come to mind here. Our market has seen tremendous innovation throughout the COVID period, and that still does continue to be the case. And the innovation is kind of illustrated with those 2 bubbles that I've shown you on the right-hand side. Now, this is an excerpt from an entirely different study that we've also carried out, where we were looking at all the mobile apps that consumers in Australia utilize to engage with financial services provider. Now that's some methodology consistent year on year, everything the same, but the results of our research showed that there were 866 apps that kind of met our criteria, a huge jump from 164 apps just 2 years before. So there's been huge innovation in our market that has actually lowered the barriers to entry, making people to really get in, listed markets with relatively small amounts of money. We can, think about omnibus models, for example. ETF is going to be another part of the story, which I'll bring up later. But I think it's really important to kind of focus on that supply side. Because if we look at some of the other reasons, desire to learn a new skill, that's actually code for, I had a lot of time and didn't know what to do, so I kind of picked up something new, right? Now that spare time that many of us had during COVID has certainly sort of come down, if not gone to zero, right? And so if you think about all of the triggers that we had during COVID and whether they have still persisted or otherwise, we actually find that the innovation from the supply side and what we, the industry as brokers, were able to bring to market, that is actually the main driver that has allowed the market to actually remain resilient. That's kind of our view. So that's one point. You can see some of the other drivers that we're talking a lot about. Recommendation from friends and family is the third in the Australian chart, but it's the first in the Singaporean chart. I want to talk about this item because it's word of mouth recommendation. That's how the new to market really get in. That's how younger investors get in. And the really important point to make perhaps is when we talk about friends with that new generation, Zoomers and very soon Alpha, these are the friends that they really have in life and all of the other friends that they have on social media that they've never met, right? And I think that really starts highlighting all of those channels where our next wave is about to come from. All right, final point on this slide. The ability to manage my retirement savings. Now, it's impossible to go around town talking to any financial services provider and not hear about retirement. It is definitely the hot topic in our market. And you can see that what we're seeing there is about 18% of these new Australian investors are really taking matters in their own hands when it relates to their retirement and feeling that, they're going to try and DIY. In the UK, the slide just below that, that proportion is actually a lot higher. It's more than 40% of new UK investors that are saying that they actually enter this space to do exactly that, to kind of start preparing for their retirement. And so what does this tell us? I think what this tells us is that consumers, I'm sure this is maybe a bit of a trivial statement, but consumers are certainly not monolithic, and how we sell our products to them really needs to be, adjusted based on these drivers. And increasingly, retirement is part of that story for retail investors. I'll come back to retirement. Okay, but before I move on, I actually wanted to perhaps be a bit biased here for a minute or two and speaks to Australia bucking global trends. Again, remember, we are in a market here where the population of new online investors has increased. Our senior analyst put this fantastic slide together. And what it is showing is that in Australia, the level of innovation and competition that we've seen, where both incumbents and challenger are really always, trying to meet one another to best service customers and really try to kind of claim their share of the market is, I believe, unrivaled. One of the latest innovation is from one of the biggest banks here, which has kind of integrated an investing app, if you will, or button within their banking app, really kind of trying to reach out as broadly as possible. But you can see in the past few years, we had asset managers coming in, really innovative, perhaps fintech players like Superhero, eToro, Momo, really, offering different value propositions to meet the need of customers and to really ensure that customers have choice. And at the end of the day, that's what creates the environment for the best possible outcomes for investors, isn't it? And very often what we're hearing these days is we want our best possible retirement. So it is critical to have choice if you want to create that best possibility. All right, I'll move on. So this is going to kind of play out for a little while, but when it stops, what you will see in Australia is that we have in the top 5 brokers in our market, a market leader that has amazingly maintained their share. I almost want to kind of go there and point this, but amazingly maintained a significant dominance of the market. We have some non-bank providers that have been elevated to a really high position in that top 5, and we have one of the asset managers, Vanguard. Yes, so it stopped there, but then it goes on the loop. That has also emerged. Some other markets, I think Hong Kong is a really good one when it pops up on screen. You will see, there's a lot of fluidity in the competitive landscape and how it's evolved over time. And of course, this is a great showcase of the depth of our work and our ability to support you with, sizing your opportunity, understanding what your addressable market is in those different jurisdictions. All right, ETFs. So we're back to ETFs. In my view, it does tie to retirement because, ETFs are meant to be kept for the long term. They're supposed to be passive investments. I think George Soros has a quote around good investing should be boring or something like that, and I believe ETF managers may kind of want to be in that category, but there's certainly nothing boring about ETFs. So on screen here, we can see that in our market, the size, the number of retail investors using ETF has just kind of exploded again. ETF is kind of the product of choice for many who are entering, trying their hand at investing. It also does achieve that number 1 driver, which was the ability to invest with small amount of money, reducing those barriers to entry. And the reason why we say there's nothing boring about ETFs is if we look at the typical portfolio of a frequent trader, so these are people who place 48 trades minimum, and certainly a lot more than that, but a minimum of 48 trades a year. They're increasing their allocation to ETF, and it's going from strength to strength. So you're looking at the 3rd and 4th kind of items on the legend there. And so mainstream investors, mom and dad, as they often refer to, as well as frequent traders, they're really embracing this asset class, or this product, I should say, for the diversification benefits that it provides. So yeah, let's keep watching the ETF stories. All right, I want to bring in retirement. You may recall this slide from earlier on, where we had 46% of new UK investors saying that they actually started investing because they wanted to manage their retirement savings. The proportion in Australia was 18%, and you can see that there's a variation right across the board. I think this is where I kind of start weaving some of those other threads, because something that we have learned through our body of research is that there's probably like 3 key things that Australians need to retire well. So we put that like 3 pillars. So there's shelter, roof over your head, there's health, otherwise, nothing else goes well, and then there's advice. And advice measurably and consistently elevates the degree to which, we get good retirement outcomes. And so I want to share with you some of the data that we have around advice, because very often what we see, all right, so this allows me to talk about the gap. So I've been talking to you so far about DIY, right? So those investors who are doing it themselves and investing in shares, ETF, and what have you, by themselves on an online platform. At the other end of the spectrum, so that's kind of the lightest blue that you see on that screen, we have about 1.9 million consumers in our market that see an advisor year in, year out. Now, I can tell you, so sneak peek in our upcoming financial advice research, we're actually going to see that number decline. But really the point that I would like to make with this slide is that whilst COVID actually oversaw an explosion of retail investing, on the advice side, nothing really happened. Like those numbers remain really low and are actually declining. All right, so what do we need to do to perhaps turn this around if we accept the proposition that advice is absolutely key in helping Australians retire well? So I have a few propositions here for your consideration, but before I get there, of course, I want to talk about regulation. Because if you think of, theory of constraints, regulation is certainly an important factor that needs to be considered in order for us to, do things well and grow appropriately. All right, so there's a lot of information on this slide right there, but what it is highlighting, actually what I think it highlights is the agility of our regulators. So top is Australia, bottom is the United Kingdom. We have, both markets, both countries have like a principle-based approach to regulation, so I thought that was kind of a worthwhile comparison. And I actually see a lot, many more similarities in that in the past little while, when it comes to regulating advice, we've actually seen a shift towards really embedding consumer duty right at the center of what financial services providers do and advice providers do as well. And so I believe we are in a place now where consumer best interest being at that center of our thinking really allows us to utilize any kind of information we have on those consumers to actually offer the better choices they need and the help that they need. Now, I'm going to run out of time, but let me tell you about some of the limitations that we see around advice, and that, as an industry, I think we can sort of all work together to try and solve. Cost is a very sort of popular one. So when we ask about, why are all those people not using an advisor, it's always, cost. What's happening, as you can see on screen, is that full sort of comprehensive advice, SOA, will cost, just for the production of that document, about $3,000. Now, when we ask consumers who say that they have advice needs, how much would you pay to see all of your needs met? They say they will be prepared to pay about $600. So there's a gapping hole there that doesn't seem to be able to be breached. But we think that's just part of the issue. The other part is the delivery model. Actually, consumers want to be held by a whole range of players, not just one delivery model. And we know that in our market, that's not quite what we have right now. Delivery model part 2 is actually a really interesting one, which actually brings us back to the DIY experience. Consumers want to be part of their wealth building journey. The whole concept of completely delegating their financial affairs to someone that perhaps they've never met before is perhaps not necessarily natural. I think you would agree. And so we want to be able to collaborate, and that's the validator tranche there that you can see as well. And then finally, around the delivery model, I also want to mention that we want to start small and grow over time. So the thing highlighted there is that younger investors are a lot more inclined to start using an advisor if they've already reached a previous goal. And I actually see that as a perfect illustration of how DIY providers can work with, advice full service providers to actually, build that funnel and allow consumers to kind of jump in and out as their life stages kind of request and demand. All right, the final one is a bit of a whiteboarding set of thoughts, which almost kind of summarizes all that I've kind of shared with you today into maybe driving your thinking about what that next frontier may be. All right, so if we're going to bring the best possible help and give the best possible options, what do we need to think about? Our view is we need to place the consumer right at the center of our whiteboard and actually not put cost front and center, because it's almost putting the cart before the wheel. We need to look at their needs first, and we also need to not be phased.
Hello, everyone. Just a quick reminder to head over to the Summit Bar to enjoy free drinks from 2 to 3 p.m. Thank you.
Please stay with me one more minute. And we also need to not be fazed by the fact that we're not the incumbent, because consumers will turn to whoever can give them that help. Now, with that, I would be remiss if I didn't kind of show you this. Please. if you are interested about the insights that we've shared today and you want to learn more and perhaps you want to talk to us about helping you grow your business, please scan this QR code and there's something for you there to win where we can help you power your own strategy. Now, I know I'm right on time, but can I take just one question? I'm happy to take the questions.
Hello, yeah, thanks for the opportunity. During your
Unlocking smart money secrets. Trade changing markets is starting now at the exchange stage.
you told us about the outcome of the investment. Two things I wanted to ask. One, from your research and your experience, the trend in crypto shares, unit trading, management trust, and all that. That's number one. The second one is, can you propose to somebody like us, like me? I'm into finance, but I need some guidance in which areas I should be investing so that I can tell my customers as well. Thank you.
Right, that's a great question, which I'll start answering by I am not a financial advisor, and there are some regulators in the room, so I need to be extremely careful. But to your first question, what are some of the trends that we've seen around those products you mentioned? Really interesting in our market, and I'm really curious to know, in others. What we've seen is, as I mentioned, appetite for ETF, really an explosion for the adoption of ETF by retail and investors, but also by advisors as well. But some of the other products that traditionally used to be the preserve of what advisors used to build their portfolio, being managed funds, unit trusts that you mentioned, are now being almost like rehoused within these structures we call managed accounts, which offer a whole host of benefits, but direct utilization of managed funds has actually reduced, but where advisors and I guess the end consumers access it is through different sort of shells that offer additional benefits. I'm happy to talk to you about that perhaps offline. Yeah. All right. Perhaps Dushka is signaling that I need to close it here. Can I thank you again all very much for your attention? Thank you. And enjoy the rest of the conference.